Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is U.S. Morning Forex Technical Report, where I take a look at the technicals that are driving the Forex market by definition, and things like the risk levels, the bias levels, things like targets, where you're going, what you need to get to and through to increase the bias in the direction that the market is pushing toward. So with that said, let's take a look at some of the major currency pairs. We'll start by taking a look at the euro versus U.S. dollar. Looking at this chart, I'm going to outline the area that has defined the trading range for this week. It's this box right here, Monday, Tuesday, Wednesday. Today's Thursday, and the low of that area comes in at 105.75, defined by swing lows through here and here. On the top side, we have a very defined ceiling area, including today's highs, which came in up near the 106.56 level. So if you take the difference between this level and this level right here, it's only about 80 pips from the high to the low. That's not a lot for a trading week, indicative of a non-trending, holiday-like trading environment where sellers lean against resistance and buyers buy against support. In trading yesterday, the support level came in not at the lows from earlier in the week from Monday and Tuesday, but at the 50% retracement. That is of the move up from the December low. That December low came in on this day right here, which is December 7th, and the high price was trading last week. 50% retracement came in 105.88, and as you can see, the low price from yesterday came in right down to that level and found support buyers and pushed up toward our high ceiling area through here for the week. And that's what happens in a non-trending market where the market is consolidating, holiday type of trading. Now, we did move below the 100 and 200 hour moving average, as you can see in trading in the current hourly bar, and going down, testing the lows for the day. The GDP numbers came in a bit stronger than expected, 3.2 for the GDP versus 2.9 expected. We also saw final sales up to 4.5% from 4% last, I guess, and we saw the deflator move up to 4.4% from 4.3%. The core PCE core prices came in at 4.7 versus 4.6, so higher inflation, and it's pushing the dollar to the upside here. We're seeing stocks move lower, yields move to the upside here. So all that is playing out here as a result of that GDP data. Yeah, we're seeing the 10-year yield or the 2-year yield now up about 3.7 basis points on the day. So we are seeing a pickup in yields as well. So all that is leading to higher yields, lower stock prices, higher dollar. That seems to be the story here. Can the price stay below the 100 and 200 hour moving average? It's the blue and green line in this chart now. That would be what traders would want to see, and then get below the 50% retracement and this swing area. This swing area was defined by the old swing highs going back to early December. This swing high right through here, and this swing high right through here, and this swing highs through here. All were then broken and moved to the upside here, and then we came back down into that area, sort of right there, and broke below it, as you can see in trading here this week, but was able to move back above that level. So watch that yellow area, watch the 50% retracement, watch the lows on the downside. If we were able to keep the momentum going and break outside of this box, then that would be more bearish for the euro versus US dollar. It's not exactly a box, but you get my point. Okay, let's take a look at the dollar versus yen next. And what we notice here on the daily chart is that the low price that we saw 2 days ago came down and tested the low price going all the way back to the month of August through here. That low price, we got within 15 pips of it. This was back on August 2nd, by the way. Got within 15 pips of that level. It looks like it's closer, but really only 15 pips of that level, and the market started to bounce back to the upside. What we do have also here on the daily chart is this swing area, and the swing area is about 75 basis points. It doesn't look that much, but yes, it is. So this swing area is what we're going to be watching for as support. And you can see in the month of August, when the market moved down to its low price that we tested, got within 17 pips yesterday. The market came down, tested the 100-day moving average. That was the clue to move higher, and then we reestablish support in this swing area before moving to the upside. So that was a nice little technical move, and really yesterday's, or the low price that we saw on Tuesday, was a nice little technical bounce off of that level. And in trading yesterday, we held support like we did here against this in this area right through here, and we are currently trading above the 132.02 level, which is giving a more bullish bias here. Now, what we haven't done off this daily chart is get back above the 50% retracement. That's of the 2022 trading range from this low right through here to this high right here. 50% comes in at the 132.7, and you can see we haven't been able to move above that level. So that's what we're going to be looking for, is a move above the 132.70 level to increase the bullish bias on the dollar versus yen, if that's the way we are going here, and we are trying to move a little bit higher here off of the GDP data after moving lower in the Asian session and kind of just ticking higher through here in the London European early morning session. On the hourly chart, I'm going to put a little line here, 132.70 level. It's right around there. We need to get above that level. That's, again, the daily chart, 50% retracement level. And then if we move above that level, we'll start to look toward the 38.2% retracement of this move to the downside. This is the trend move that we saw this week from the high to the low through here. This is off the Bank of Japan decision to increase the 10-year yield target to 0.5% from 0.25%, that were the ceiling for that rate, and that is what caused the sharp move to the downside. Since it's in somewhat of a corrective process, but we need to get above the 70 level and the 133.19 level to give buyers more hope, and then we'll look toward the 100-hour moving average. Absent that, and the sellers are probably still in control below the 50% retracement. Let's take a look at the dollar versus or the sterling versus U.S. dollar. And this pair, through the month of December, we broke above the 200-day moving average here. That was the first time above that, or we closed above that level, going all the way back to this period right here, which is September 2021. So a significant break there, and we started to move higher, moved into this swing area here, and then moved up to the 61.8% retracement. That's of the 2022 trading range. This is a high for the year. This is low for the year. And the 61.8% retracement held resistance, and the price started to move back to the downside. We moved back to the falling 200-day moving average and held support, and then broke below that support yesterday. Came right back down to the 50% retracement level. Sounds familiar, dollar yen people, and then rotated to the downside further in trading here today, moving away from the 50%, or moving below the 50% retracement for the first time since this day right here, and that keeps the bearish bias. We're currently trading at 120.26, which is near the lows for the day, and further away from the 200-day moving average at 50% retracement level. So there you have it. That's more bearish bias here for the sterling versus U.S. dollar. Taking a look at the hourly chart on that pair, and if we look at that, we are seeing that what is significant off of this chart is the inability to get back above the 100-day moving average. We actually tried to move above it in trading here today after the break below the 200-day moving average, trying to move back higher in the Asian session, came right up to the 100-hour moving average and found willing sellers against that level. So guess what? That gave the sellers more confidence to push to the downside, and we're seeing the follow through, selling through the 200-day moving average, and now away from the 200-day moving average to new session lows. I have a swing area through here that I've earmarked off of this daily chart. This comes off of swing levels through here and here, and we had this period through here where the market traded above, which is more bullish, below is more bearish, and then it decided what it wanted to do right through here after we broke above and came down to it and moved back to the upside. So that was the last time we moved into this area, and as you can see, as yesterday's trading, we came down into that area and found support. The support buyers there, and push back to the upside. So getting back above that level is step one, and then the 200-day moving average is step two for the sterling versus U.S. dollar. So there you have a look at some of the major currency pairs to start your trading day, and technical biases here. Just quickly, the Aussie versus U.S. dollar is that down testing its 100-hour moving average, trying to move above the 200, back down to the 100-day-hour moving average, move below that level with momentum at the 166.97 would be more bearish. Stay above it here if we're able to find support buyers here like we did here yesterday, that would rotate the pair back to the upside. We'll pay attention to that. And also the New Zealand versus US dollar. If I take a look at the daily chart or the daily moving average, this is a 200-day moving average. And as you can see, we're down testing, trying to break below that level at 62.555. So key level for that currency pair as well. Greg Michalowski, good fortune to trading. Bye-bye now.